Hi there, this is Brodrick for Global Wealth Report. Today we're going to look at two charts, gold and oil, and we're going to see what those charts tell us about where these commodities are going. First up, let's look at gold. This is a complicated chart, so we'll go through it slowly. It's a weekly chart. The candlesticks are the price of gold as measured by the GLD, which is an ETF that holds physical gold. It peaked last month, the price of gold did, and it's heading down to test support. The blue line is the US dollar. The dollar and the gold used to track each other, but over the past 3 weeks, the dollar is going higher while gold goes lower. On the bottom of the chart is a momentum indicator called RSI. Its recent uptrend is broken, indicating more downside. Basically, this chart is telling us that gold could pull back for a bit. We have seen the gold holdings in the GLD zoom recently, and we probably got too many speculators in the gold market, and so they're just starting to pull out a bit. The rise in gold is really all about the ETFs that hold physical gold, like the GLD. They slacked off on net demand recently because while the stock markets are down, they aren't falling apart. The stock markets aren't falling apart at the rapid pace that was going on for a while. But don't expect gold's pullback to continue for long. People may not be as scared as they were, but they're probably going to get more scared again. While I expect we'll see gold pull back to around 880, there is more support below that, and the efforts by the governments around the globe to jumpstart their economies should be inflationary down the road. Okay, now let's move on to the second chart. This chart is a daily chart of crude oil. Sure looks like crude oil has put in a rounded bottom, or has almost put in a rounded bottom. It's certainly on its way to completion. Now, crude oil has pushed above its 10 and 50-day moving averages and is testing overhead resistance. Momentum is bullish. If crude oil breaks out here, it could run up to its 200-day moving average around 83 or 84, and that would be a heck of a move. So, what's driving oil? Traders are playing off speculation that the Organization of Petroleum Exporting Countries, better known as OPEC, is likely to cut production quotas again when it meets on March 15th. OPEC has cut production quotas by 4.2 million barrels per day since September, and it looks like these cuts are starting to take effect. OPEC is actually showing some discipline in its quotas, but there is still some cheating by about 800,000 barrels a day. And the fact is, the more OPEC cuts production, the more members are likely to cheat. OPEC is expected to cut by about 500,000 barrels a day at this next meeting. Some analysts have been pushing out whisper numbers, saying that OPEC could cut by as much as 1 million barrels a day. I believe that's building up expectations, and that could meet with disappointment when the cuts, or if they don't have cuts, finally come. I would expect some selling in the market to happen as we get close to the OPEC meeting, and if the market is really disappointed, we could see a lot more selling afterwards. I would watch oil and see if it can solidly close above 50. That's really what I'm doing. See, if it can do that, then it could really run higher. If not, then we'll probably see crude oil continue to be range-bound. Just remember that longer term, supply is being destroyed because the price of oil is too low to bring on new oil production. This is laying the groundwork for a future oil bull market. This is Brodrick for Global Wealth Report. Good luck and good trades.